Hey guys, what's up? Welcome back to another episode and a new month of the Passive Income Show. And while I'm starting a new initiative this month, I'll debut that tomorrow. I'm still continuing with my day trading, and I'm doing that because I have a new strategy. It doesn't take much time, and I think it can be more profitable. And so far, over the last 2 days, it has been profitable. So yesterday, I made $36.80, and then today, on June 2nd, I made $20.80. Yeah, $20.80. So that's great. That's great because it only took me, well, today in trading, it only took me about 1 minute. It was under 1 minute, so that was wonderful because I'll get into my strategy in a little bit, but today, $20 in 1 minute, so that's excellent. Yesterday, it was about 10 minutes. So far, it's $50 in 11 minutes of work. Like, that's great. That's great. I'll take it because, like I said, I'm starting a different income stream that I want to work on, but I still think there's something there with day trading, and I just want to continue to kind of hone that in. So I do have a full report in the works about my day trading for last month, the month of May, and I talk about, my strategy. I talk about how much money I made or lost or whatever, and so you can check that out here. If there's not a link below, then it'll be forthcoming. So with that, let's get right into the trading because that's what you guys are watching this for. So let's dive in. Okay, so here we are inside of TD Ameritrade's Thinkorswim platform. Now, one thing that if you've been following along with my trading days here of Thinkorswim is I'm not a huge fan of it. I do appreciate TD Ameritrade for putting together a platform that allows day traders and any traders to really do the technical analysis inside of the trading platform. I do think that's really a good thing, and I'm very thankful for that because it's allowed me to kind of experiment with chart pattern analysis and all this stuff. However, it's been very difficult to get my orders filled, and sometimes I've found that, especially within the first few minutes of trading, it's even more difficult to get these orders filled. And particularly, it's been hard to get these orders filled on the ETF SPY. And so on the ETF SPY, it jumps around. The orders jump around so much. So like right now it's at 305.96. You might and then there it goes 304.98. I mean, it kind of hops around, and that has to do with reading level 2 and seeing where are the buys, where are the asks, the bids and the ask price and all this stuff. So that's been difficult for me because sometimes I will miss a good fill and then I'll already be at a loss in the position. So with my old strategy, with last month, my month of May strategy was solely based on trying to learn the technical analysis that I needed to predict and anticipate some of these different moves in the market. Now, I've only been really doing technical analysis for about 2 months when we talk about like really investing in technical analysis. Last month was really the month that I really invested the most with it. And so I'm not that great at it. I'm pretty good, and these patterns are pretty evident if you're willing to just look at them. However, because I was unable to get a good fill and because I was just buying at the wrong time, it was difficult to be profitable, and when I would have a loss, I would have a huge loss. And so in this next month of trading, or the rest of my life in trading, let's see, however, I want to do a few things. And the first one is to minimize the amount of time that I hold a position, because I found that the longer I hold a position, the more risk that enters into my trade. So sometimes if I wonder, I don't know if I can go back to it. It's fine. Sometimes when I trade and I try to time out the change, like if I was trading a red to green move, let's say on a reversal pattern, and so I would sometimes get a really good entry, but because it was so volatile, when I talk about volatile, it's like moving from 305.52 to 306.40. That's almost $1 swing, and if you've got 500 shares in there, then you might win or lose $500 or anywhere in between. Now that's really good if you can time it well, but it's not good if you are not timing it well. Or so if you, let's say you got your fill at 305.94 or 305.97. Well, if this is in the middle of this candle and it's going up and down, $250 up, $250 down, for me personally, where I'm at with trading, my psychology is that's a lot of money to me, and I don't want to lose a lot of money, and so it causes me to get flustered and to sell. If I'm willing to just hold for a short amount of time and not deal with those huge swings, then as I see it, I'm minimizing my risk and I'm able to deal with my psychology as a trader right now, which is not freak out pretty much. So with that, as sort of an overview of what I'm thinking, let's look at my new strategy and let's dive in, and feel free to comment in the comments below. I'm not suggesting that you do this strategy. This is not something that I suggest. Heck, I'm even debating if I should do this strategy. The purpose of me trading is to try to develop a strategy. And so none of this, and a strategy for me, none of this is advice. None of this is advice. So anyway, with that said, as a disclaimer, and it is a disclaimer, none of this is financial advice. Okay, so the strategy I'm using now is to trade and to try to profit just 1 cent increments and only do 1 trade a day. So it's very unattractive probably for a lot of people to just make 1 trade a day and to profit only 1 cent increments. But the way that I'm making it a little bit more exciting is to enter with larger sizes. So right now I'm trading the SPXU ETF, which is an ETF of S&P 500. It's an ultra pro short, so it means that if the S&P 500, or let's say if SPY goes up 1%, then SPXU will be down 3%. Conversely, if the SPY goes down 1%, then SPXU will be up 3%. So the swings in this can be kind of wild, percentage-wise, but that's okay. That's just fine. You need a little bit of risk, a little bit of volatility to make any trade work. So now with that in mind, the reason I'm trading SPXU instead of SPY is because, like we saw over here, this swing is, let's say you enter with 500 shares, you're looking at a $500 move, and the fill is going to be very difficult to get a good fill on. And so you might take huge swings, and you need to be really precise with what you're doing, the execution of it, the pattern you're trading, all that stuff. Over here on SPXU, all I'm looking for is really directional momentum and 1 cent increments. Come on. Okay, well, it's not moving, so that's not good. But it's because I'm trying to film at the same time. But let's look at what we can see here, and I'll show you what I mean. So over here on the SPXU, I'll go to the 5-minute chart up top. And let's see if this will zoom in. Okay. All right, so now they should mirror each other. Yeah, 1-minute chart, 1-minute chart, 5-minute chart, 5-minute chart. So you can see in the S&P 500 today, it opened down, and it was following this sort of downward trend. It was below the VWAP, and it was below the moving average. And so on the open, we saw this move downward. Now, I don't know what's going to happen for the rest of the day, and I don't think anybody knows what's going to happen in this market for the rest of the day, but it moved down, and then we saw it reverse and then come back down and move back up, and now it's moving up towards the exponential moving average. I don't care about any of that, because today I just saw that it was below the exponential moving average. I saw that it was below the VWAP. I saw that it was in a downward trend, and I thought that this would be a time where we might see this continue moving downward. And remember, because I'm trading SPXU, if it moves down on the SPY, then it moves up in the SPXU. Now that's important because I've been having a lot of difficulty getting filled on shorts in SPY, especially early in the trading day. So if I can go long in a position, then I can probably get a better fill. That's been my hypothesis, and so far it's been true. So I needed to find somewhere that I could go long, and so I'm going long with SPXU. Now again, first minute was all I traded today, so it went down on the opening, and over here, what happened? Well, it went up, and so I was able to trade this movement up. I'm just trying to get a decent candle representation here for you. See how laggy it is with all this? Don't like that. When I'm recording, it's difficult to do all this. Okay. So, as I said, went down over here, went up over here. It's great. And so I was able to enter the trade. I believe it was at something like 274, and I entered the trade 270. Oh, one more thing. The SPXU goes up by pennies. So let's see if we can get a better representation of this. I mean, they all go up by pennies, but SPXU it doesn't move as quickly. Let's just do this. Okay. So the SPXU fund, you're not going to see it jump and skip and go all over the place by increments of a penny or 10 cents, or you're going to see it go up in increments of 1 cent very often, unless there's huge volatility for some reason. And so with that, I thought, okay, this is a little bit more predictable. Now, and I know this is sort of long-winded, but hopefully this is helpful in the way that you might think about the markets. Yeah, 5-minute candle. Okay. So, you see here, we have it's at 1280. And let's see where it goes from here. It's probably only going to go up, 1279. Okay. So for me, what I did was I entered at 1274, and then I set my limit, which was on a 2,000 shares, at 1275. And I waited, and in a few seconds, literally, it went up to 1275. I got a fill, and then I was out for $20 because 1 penny times 2,000 is roughly $20.80. And so again, that's the trading strategy, to just get in and out. Now you could say, well, how did you know it would go up? Well, the indicators that I was talking about are back with the VWAP, exponential moving average, the trend that it was in. Those were all things that solidified why I thought it would go up in the SPXU fund. And so that's how I was able to make that trade. Now, what if it goes down? Okay, well, that's a good point. What if it does go down? Well, if it goes down, because I'm trading so many shares, it is putting a lot of money at risk. However, I've seen that it oscillates so much between share prices. So yesterday, for instance, to give you an example of what I'm talking about, I just counted how many times the fund, the SPXU, hit $12.99. So $12.99 was a price. I believe it was $12.99. Was the price that I was watching this go back and forth and hit and not hit. And so it would go to $12.99, and then it would go down to $12.98, and then it would go up to $12.99, and then it would go down to $12.98. And so within the span of just 1 minute, the share price hit $12.99 1, 2, 3, 4, 5, 6, 7 different times within the span of 1 minute of me just arbitrarily counting or tracking when this would happen. And so because of that, because I found a point where I knew the price would oscillate, between different shares and different pennies for quite some time, because I was reading charts, I feel like I can wait, for me personally, in my psychology of trading, I can wait a little bit longer for it to go back up, because I know that on this fund in particular, the volume is there for it to go back and forth many times. So I don't have to watch it go down $300 and come back up $300. I just have to say, okay, it's just going to move a penny, $20 increments there. And maybe if I time it right, I still have to read charts, but that's something that I can have a little bit more comfort in it, just moving 1 penny. And if I get that fill, I get that fill. So anyway, that's the strategy I'm going in with. Again, I only traded for less than 1 minute today, which is wonderful. So I was done at 8:31 in the morning, and right now it's 8:58 in the morning. So I'm just, excited for the day ahead, because like I said, I got other things to do this month. This month is not going to be about day trading. This month is going to be about something else. And so more on that later video. But I also want to, I want to keep day trading, because I do think it's an interesting skill set to have, to be able to make money in a market that's always going to be there. So if in the future you get, times are tough and you're not able to make any money for yourself. Well, if you can trade the stock market well, which not many people can, so if you can trade it well, I think that you'll have some sort of access to capital at some level. Hopefully you don't lose all your money, though. Don't trade anything. None of this is a financial advice or an endorsement of any particular fund, neither the SPXU or the SPY. Okay. With all that said, I've got stuff I want to work on, so I'm going to get to that. You guys, thanks for watching, and if you have any comments or you think I'm crazy, then just leave those below in the comments section. Make sure you hit the like button and subscribe if you're into this sort of thing and want to continue to see someone on a quest to make some streams of passive income. Have a great day today. Have a productive day today, and I will see you guys in the next episode.